Hey, Jay, I just saw a stink bug directly on top of the camera. Hey, traders, checking in on the stock market today. So further weakness with bears keeping full control. We had a bounce into the close that was then erased with 10 minutes of dump, and we're down near the low of the day. And the bears are keeping their control of the hourly downtrends. 4-hour downtrend is my guide on the futures charts. Ever since Powell FOMC, we're setting those lower highs and lower lows. So bears still have full control as far as I'm concerned with the broader market. Not close. Well, we are close to daily oversold. So we'll keep an eye out for that. We did fill a gap down here, 377.02. Next level, 369.52, and then the fear low. And obviously at this point in time, the bears are focused on the fear low. If I'm going to be looking bullish in the face of this weakness, I'd love to see a straight dump, break 360, and I would look to be bullish on that break of support because we would then be in some extremes. Depends on how we would get there, but that's just something that comes to mind initially. Otherwise, the daily downtrend will continue to dictate my decisions. NASDAQ, same deal, 4-hour lower high overnight, bounce into the end of the day, a lot of it erased, and just struggling to get any follow through. There is something that I am watching that is keeping me from being aggressively bearish. It's making me cautious as a bear in the short term, and it's not in these individual charts for the broader market. It's in the clues that we look for in other places. And so I'll go over some of those, namely, well, I'll go over it right now. So the first is the dollar, potential daily rising wedge. I'm not putting a lot of faith in this because you don't want to be looking for rising wedges against something that's in a breakout bull market because they oftentimes will break bull. It's a much less reliable signal. The most reliable point for a rising wedge is when the longer term time frame dictates a lower high is most likely. And when you're in a breakout on every time frame, you don't have a scenario where a lower high is most likely. If this was the hourly chart looking for a daily lower high, it's a much higher probability pattern than a breakout. That's one thing I'm watching. The VIX, also watching for this to be a potential rising wedge, 4-hour time frame. We can see the bull breaks, even the FOMC. I mean, we're just really respecting this. And I drew this pre-FOMC. So to then see it reject and then hold support and then reject and hold support, since I have drawn it, that just continues to solidify my viewpoint that this is an important short-term pattern to be watching. And I'm not trading off of this. This is just my visual guide. And again, I'm just using it as a clue for my analysis of the broader market as a whole. The third thing is crypto held up really well today compared to, I mean, this is what crypto's doing. 23%, 10, 9, 7, 6, 6, 6, 6, 5%. So big green day for crypto, but our high risk, high reward sectors in the market were selling off. You have cannabis, which has re-entered full bear control. Cannabis, they were down 7%. You have the psychedelic sector getting hit really hard. MNMD down. Oh, it had a bounce. It recovered a good bit. Big recovery from those lows, up 10% from the lows. But there was a big sell-off there. We had all our relatively stronger names act as laggard bears. So remember what I've been saying. Relative strength, if you have persistent broader market weakness, relatively strong names just act as laggard bears eventually. They can't keep up against the onslaught of the broader market bears. And so I look at the solar sector negating the bull flag on the weekly and dropping to lower lows. And if you look at TAN versus SPY, the shift happened after we rejected from TAN's quadruple top of resistance here. EV names dropping hard. RIVN has been dumping that same period in time. Tesla, only the last 2 days, but it's shifting. Talked about it yesterday. Tesla divided by QQQ, big drop today, showing that relative strength turning into relative weakness because we rejected from key weekly resistance. Netflix is holding on much better. It is still pulling back on the daily, but we're not seeing the same drop off in the relative strength. For Netflix, it's holding on. They're very similar setups, but at this point, Tesla is rejecting harder from its resistance. My point is, we got all this weakness in these higher risk, higher reward places in the market, stock market, But crypto is holding up really well for bulls today, and that's keeping me watching Bitcoin's potential falling wedge. I'd be a lot more confident in everything that I just talked about for these little clues if the S&P 500 and the NASDAQ futures chart was a falling wedge as well. But it is only Bitcoin right now where I'm seeing it nice and clear, where we're breaking support multiple times straight into bounces. This was a support break straight into a 5% plus bounce. This was another support break of the same thing into a 4 or 5% bounce. We would have to break 17.5 with follow through for me to negate this as a potential falling wedge. So just the fact that Bitcoin's a potential falling wedge, dollar potential rising wedge, the VIX is a potential rising wedge, that's enough for me to say I'm not going to go aggressive bullish, but I'm going to be a bit more cautious as a bear if these patterns continue to develop. Essentially, it's, my video yesterday, full bear mode, I'm bearish as long as we're weak. Whenever have that much conviction, I always want to put on the opposing glasses. I put on my bull glasses and say, okay, what do I need to be cautious of? Because I've got high conviction as a bear. What would make me wrong? What would come out of nowhere and surprise me? And so this is what I come up with to answer that question as to what I'm going to be keeping an eye on over the next couple of trading days. NVDA, daily lower high and lower low. EMA 12 resistance, continuing to reject the price. Fresh lows. If we see a green day tomorrow, I'll start scouting a falling wedge just because the last couple bear breaks will lack some follow through, but have to see green tomorrow for that to even enter my mind. Tesla weekly consolidation underway after the double top rejection. And now bigger picture, it's all about 265.74 to see if bulls are able to maintain that support. Essentially, we're just stuck within a tightening range now. 2-day time frame, high, low, lower high, and heading back down towards that level. Hourly, oversold, weak bounce attempts, and again, just the shift in momentum that was initiated by the rejection from key resistance. Solar sector, as I mentioned, sold off. Hourly downtrend, daily downtrend are guides there. Monthly consolidation is now underway. Healthcare. Green day, it was the strongest sector today, up 0.5% into the close. But are we still in an hourly downtrend? Yes. So we would need an hourly trend change tomorrow for the daily bounce to get going. But for now, the hourly trend will remain our guide. The financial sector bears following through from their support break yesterday. They're looking down at the fear low. Currently about 4 or 5% from where we stand. Lots of space for a daily lower high next bounce. IWM bear followed through in a big way, heading back down towards the 166, 167 support zone. Hourly and daily downtrend remain our guides there. Biotech sector, bit of a bounce. Need the hourly trend change, not a convincing one for me. If we change the hourly trend, we're going to zoom out and watch for a lower high, anything under 82.82, which was a triple top 3 days in a row. That's the most important daily resistance level for us to be keeping an eye on. CCJ, bears lower low. Not really watching those trend lines unless we're green tomorrow, but weekly consolidation continues. Probability for a weekly bull flag decreases. Still going to be scouting a weekly high or low, absolutely, but still a daily downtrend. Fresh lower low. So lower highs and lower lows will remain our guide as long as they persist. The dollar, as I mentioned, again, this is not a high conviction rising wedge for me at all. Hourly is tightening up, but overall we're still, bulls are holding 4-hour EMA 12 and daily EMA 12. So we would have to see a notable shift here for this rising wedge to increase in probability. Silver, sideways still, daily inside bar, trying to hold on well for the bulls, but have to see dollar weakness if we're going to gain any silver confidence. Oil weakness, daily EMA 12, rejecting the price 3 days in a row, close towards support. Burden on bulls to get over daily EMA 12 to try and shift some momentum. And natural gas, daily bear flag confirmed. Weekly consolidation continues. Monthly consolidation continues. Bears in control of the daily and the 4-hour charts. That is the broader market rundown. Didn't place a trade today. First day in a long time where I didn't place one trade. Was just away from the screen, doing some other things. But overall, hourly downtrends remaining our guide in most places, watching those little clues to see if they develop into bigger clues. but sticking with the bears as long as they show this strength. QQQ divided by SPY out of curiosity. Weaker today, which is what bears want to see. They want that downtrend to continue. So we'll see what tomorrow brings, but bulls have proving to do because there's a lot of bear momentum in the short term still. So that's all we've got. Appreciate you watching. Hope you have a good rest of your week. Don't have any end of the day content here. Heading to a Shaky Graves show in a bit. Got my fancy velvet vest on. Didn't even know they made velvet vests. And yes, there are matching velvet pants to go along with it. Other than that, I hope you're well. I'll make some more yard content this weekend. Do good things.